Now, welcome you again to the final section of today's program. We are going to look at the IAS 16, some few questions under IAS 16, property, plant, and equipment. I believe strongly that you go through the tuition video. So, IAS 16, property, plant, and equipment. Good. So, in short, summary of the standard. First, you need to know the objective of this standard, even though no examiner will ask you. Objective and what? Scope. You know it, but not highly examinable. Not highly examinable. Two, you should know the basic definition of some terms. The basic definition of what? Some terms stated in the standards. That one is a must. Three. You should know the recognition criteria of PP. Recognition. And that's where most of your exams will be centered on. This IAS 16 is a very topical standard. You cannot do away with it. So make sure that every aspect is very lengthy. For the first video, which covered just half of the standard, is around 1.5 hours. So that is a lengthy standard. So kindly take your time and then go through it, and then you'll be fine. Good. So that's the recognition. Talks about how do you record it, how PPs are recorded. Good. So in fact, it is highly. The one with the star is what? Most likely, like must. It's a must to know it. And then the next one is what? The measurement of PP. How do you measure or how do you value PP? So measurement. That one too, it is what impact. That's what they are going to ask you. You cannot write any financial reporting paper without measurement of PP. But definitely, the company they are going to report on, they have PPs. How do they state their value? They will do evaluation. They will depreciate them, some of them. So how do you do the reporting? And then how do you get the value? These two are what the main key issues that you have to understand for every standard. Good. Then the last one, when you are done with everything, when you are done learning these two, then you come and then familiar yourself with this. That's the disclosure requirements. Disclosure requirement is not other highly examinable. So that is all. So that's the summary. So in summary, objective of IAS 16, the main objective or the objective of IAS 16 is to prescribe what? The correct accounting treatment of what? Property, plant, and equipment. Scope. It covers all standards except the following, only 3 standards. So only 3 assets that IAS does not what? Cover or does not deal with. So the exceptions are 1, biological assets, except what? Bare plants. Good. And if you want to know detailed explanation, kindly visit the first video. It has been detailed in it, especially biological assets. Good. And the movement. 2, mineral rights and gold. Mineral rights and then gold. So mineral rights and mineral reserve. If you do have concessions in the gold, oil, or any other mineral reserve or mineral rights, please, they do not form part of PPE. So if you have stored all your wealth, your money, all your valuables in goods or oil, they are there, you are not selling it. Every day you are buying goods, you are not selling it. You cannot classify that good as what? PPE. Why? Because it's been covered by a different standard. Item number 3 that you cannot classify as PPE. One, PPEs that you have classified them as what? Held for sale. So 3 items that do not qualify, or the IAS system does not work, govern. Exception, 3 items: biological assets, mineral rights or mineral reserves, and what? Non-current assets held for sale. Non-current asset what? Held for sale. So available for sale, non-current asset, or cluster for sale. These 3 items, they don't fall under what IAS system. But don't forget that there's a section to the biological assets in the first video when you go to find, except better plans. So we are done with the objective and scope, and we have it there. Then we start with the basic division of some terms. The terms stated in the IAS 16 are the property, plant, and equipment. You know the definition. And all of that, we have defined the terms in the predefined. I believe strongly that when you go to the first one, the terms are clearly defined in the, and I listed them there. There are about 6 to 8 terms stated in the standard, the basic ones. And I went to the recognition. Recognition. In fact, in financial reporting, we said that recognition simply means incorporating certain items in what the financial statement, or recording. Do I call it recording? You know, you can't just stand up and then recording items in the financial statements. They must pass a certain what condition or criteria. Each and every element have a specific criteria that need to be fulfilled before you can record or before you can recognize that item. PP also have, there are 2. What are they? So before you can record any asset, any PP on the financial position, 2 conditions must be in place. So here we are saying that the PP, it must be recognized as what? Non-current assets if the following 2 conditions are in place. So PP must be recorded as what? Non-current asset. If 1, okay, it is probable that future economic benefit will flow to the entity. 2, the cost involved can be measured reliably. So these are the conditions. It's very important. We are done with that. Then we talked about the measurements. So that's where we start our first illustration, our first question. Then we start solving from there. So measurement. We said that measurement simple means how to get a value. Valuation. That's the meaning of what measurement. Recognition, recording, measurement, valuation. We are done. Then we said that the measurement, there are 2 types of the measurements. We have what? Initial measurement and subsequent measurement. We are still under the what? The initial measurement. We've not started with the subsequent. So today, all our questions that we are going to solve will be revolved around what? The initial measurements. So the initial measurement talks about the initial recognition of what? PP. So if you apply PP initially, first time, how do you record it? Good. How do you record it? You record PP initially. So if you acquire PP initially, how do you record? So initial measurement of PP. Initial measurement. We said initial PP must be measured at what? At cost. Good. Initial PP must be measured at what? At cost. And we said that the cost is a cash or cash equivalent that you paid in order to acquire the assets, or fair value of other consideration. Sometimes you can acquire PPE not through cash or even cash equivalent. You can pay it in kind, or like you can exchange assets. You have a very old vehicle there. You can add a little amount to it and go and need to acquire office building. Yes. So probably you have very old abandoned cars or check buses or school bus or company buses. You can just go and then exchange it, top up little, then you get a office land or office building. Good. So here, the cost of the land that you are buying will be what? Will be either the money that you added plus the value of the abandoned vehicle. Together will give you the cost. Good. So that is it. So cost necessarily mean that you should like pay cash or should be cash, no. But in reality, so many things happen. Just that in books, we don't normally make things look complicated. If you should incorporate reality as that, then the exam will be some way, because you only have 3 hours. In reality, you have the whole year to account for it. So probably that's the difference. Now this course, we have the composition. So what are the composition of the course? Not all costs form part. We call it component. Component of cost. Component of cost. It's composed of 3 items. You can refer to the first video for the breakdown. First is the purchase cost. Purchase cost. And then second is the purchase cost include what? One, it includes the purchase price itself. 2, transportation, handling, delivery costs, of them are the same. Then 3, import duties. And then taxes. Here the taxes, it must be what? Non-refundable or irrecoverable purchase tax. Any tax that you pay on these goods that you are not going to recover. Any tax that you pay on these goods that you are not going to do what? Recover them. They are the one that we are looking for. How we get it good. So that is it. And then less trade discounts or similar rebates. So that is it. They are around the purchase cost. Then go to directly attributable cost. Directly attributable cost. Directly attributable cost. These are what? Site preparation, testing, installation, then professional fees such as what? Architects, lawyers, quantity surveyors, consultants used in acquisition of the asset. Good. And then lastly, any other cost incurred. Any what? Other costs incurred necessary to bring the asset to its intended use. Sometimes aside this cost, you incur some cost that will help you to make the asset available or ready for use. That is it. Here, just that the costs over here are very stubborn, but don't worry, I've detailed the calculation with a practical illustration in it, so you'll be fine when you get there. Now let's go straight and then start our question. Now, before we start the question at the initial stage, once you have the component, the following items must be excluded from the cost. Exclusion simply means it must be what? Expense in the P&L. Shouldn't form part of the cost of what? The PP. 1, what are the initial operating losses? Should not be part of the cost of the asset. Initial operating losses before the asset reach its planned capacity. So initial operating losses should not be part. Sorry, that's not coming. Initial operating losses should not be part. Good. Then 2, admin and general expenses should not also be part. Admin and general expenses should not also be part. 3, pre-production cost or startup cost. We call it pre-production cost or startup cost should not also be part. Then 4, staff training cost should not be part. So this cost should not be part. We are done with the initial measurements. Now let's back it with what illustration. We are going to the questions solving stage. So that okay, so that's the summary up to the recognition and the measurement of IAS 16, the PPE. So let's see. Now let's look at the first question. So let's see. In fact, we are just calculating costs. So we are just going to look at after the cost. What is the cost of the asset to be initially recognized in the PPE register? That's all. That's the section that I want. The remaining part of the question is the subsequent measurement, and we've not done that, so I won't worry with that. Good. So what is the cost of the assets initially to be what? To be recognized? Because the initial recognition is also called, for the initial measurement is also called the initial recognition. So it's also called initial recognition. So that is it. We call initial recognition. Good. So the question is question one. Question one, tutorial question one, or illustration question one. I think it's the illustration question one. Is the illustration question one. Good. Now let's read. You have just been appointed as financial accountant of what? Asuna Company. On January 2014, Asuna Company acquired a production equipment with a list price of 250. List price, base price, all of them are the same as what purchase price. The following costs were incurred. The further costs were incurred. So the following further costs were incurred. Delivery 18,000. So the 250,000 will be part of the cost. So 250 be part of the cost. Good. Delivery will it be part 18,000. Delivery cost will it be part? Yes, great. Delivery will be part of the cost. Installation cost will it be part? What about electrical installation? Will it be part? What about mechanical installation? But whether whether they add any term to installation, yeah, done. How we get it? What we don't want to see is the pre-production cost. Good. So that is it. Now, general admin cost of indirect nature will it be part? What about direct nature? Okay, good. What about direct nature? Not be part because admin, general admin cost should not be part of what? The cost of the PP. Because if you are not going to buy the PP, won't you incur your administrative cost? Exactly. Now let's continue the game. He's saying that the installation and setting up took 3 months and further amount of 21,000 was spent on costs directly related to bringing the asset to its working condition. Wow. So will it be part 21,000? Yes, because this is other costs incurred necessary to bring the asset to its what? Present condition and location, or for to make the asset ready for its intended use. Any cost that you incur to make the asset ready, the underlying word is to make the asset ready, not human beings ready, not other items ready, to make the asset what? Ready. That's the underlying item. We are looking for cost of the asset, not cost of the other item. Good. The equipment was ready for use on 1st April. I'll explain this when we start with the subsequent measurement. It says that in fact, the depreciation must start when the asset is what? Is ready for use, not brought to use, or when the asset is available for use, when it's available or ready, when the asset is completed. And the next one says that monthly managerial reports indicated that for the first 5 months, production units from this equipment resulted an initial operating loss of 15,000 because of small quantity produced. Will it be part? Or should be part though? Thank you. Initial operating losses should not be part. So this 15,000, ignore. Where will it be? Go to operating expenses in the P&L. Good. Sometimes we will ask you, account for the above transaction. If you ignore, you lose marks. Now, when we ask you to account for the above transaction, tell us where you are going to treat it. So if you are going to exclude it from the cost, then tell us where to be. To be in where the P&L as what final. Okay, great. Now let's move on. The month thereafter show much more positive results. The equipment has an estimated useful life of 10 years. Will be part estimated useful life of about 10 years. We used to calculate the depreciation. It's not even what amount, right? Don't worry. An estimated residual value of 18,000. Residual value will be part. We used to calculate the depreciation, so it will not be part. Thank you. An estimated dismantle cost of 12,000 will be part. Dismantle cost is a special cost. Kindly, in the first video, if you have not gone through, kindly check. I work dismantle cost in it, how it should be stated at good. So dismantle cost will be part of 1,000. So therefore, putting all together, what do we have? We have 250,000 plus 18,000 and then plus 24, 21, and 12. So 250,000, 1, 2, 3. Now let's go to the board and see if we can do something there. So the cost of the assets will be, today we are just looking for cost of assets. That's all. We're looking for cost of assets. So we are going to look for cost of assets. If I do one, you do one. One mapping. So the next one, prepare you do good. Good. So it's the cost of the plants. Cost of what? Plants. First item is what? Imagine 3 zeros. Yes. So the first item is the listed price. That's the same as the purchase price. 250,000. Then delivery. Delivery was 18,000. I remember the biggest. Then installation. So let me look at the question. If I make the figures. Delivery is 18, installation is 24. Installation is 24,000. Then what again? Then additional cost, the 21,000 additional cost. Additional costs incurred, that's 21,000. Then the estimated dismantle cost. Estimated dismantle cost 12,000. So estimated dismantle cost. Please, this dismantle cost, we have to look for the present value. Because this question, the examiner was a bit silent about the cost of capital. So I'm not going to calculate the present value because we don't have the cost of capital. And we cannot assume any cost of capital. So therefore, we will not find the present value of the dismantle cost. Ideally, we should find the present value. So putting all together, that is the cost of what the assets to be incorporated in the books or the PPE register. So putting all together, we have something like good. You have 325,000, right? With 325,000. So that's what you get. 325,000 cost of what assets. Great. Perfect. I like the answer. That's great. Now let's move on to the next question. So the next one, you do it for me. The next one, we will call it Dumfo Limited. That's Dumfo Limited. Now let's look at Dumfo Limited. Dumfo Limited. So they are saying that illustration 2. Dumfo Limited is installing a new plant at its production facility. It has incurred this cost. So cost of the plant. So cost per supplier's invoice plus taxes 2.5 million. Will it be part? Great. Initial delivery and handling cost 200,000. Will it be part? So yeah. So let me start solving it. So now we have to. So I'll just clean this. So base price or listed price. So the listed price is what? The listed price is the listed price is for 2.5 million, right? So that would be 2,500. So 2,500. And the next item is the handling and delivering, right? So initial delivery and handling cost 200,000. So take initial, but let's make it delivery and handling cost. That's 200. How we get it? Good. Then let's look at the next one. Then the next one is cost of site preparation, 600,000. Will it be part? Site preparation, that's directly attributable cost growth. So cost of site preparation, 600,000. Good. Then the next one is consultant used for the advice of the acquisition of the plant. Will it be part? Consultant, that's professional fees. So it must be part, professional fee. So they call it consultant. So probably the consultant target professional consultant. So consultant fee. So that's 700. Wow, it is 700. Consultant. Now let's move on to the next one. Interest charges paid to supplier of plant for deferred credit, 200,000. Will it be part? I like that. It should not be part, eh? Or it should be part. Great. So assuming that they're supposed to pay within 1 month, but they paid for after 1 month. So it means that the supplier was annoyed and charged with interest on additional, like overdue payment, interest on overdue payments. So should it form part? No, it's not be part of the cost of their plant. So it's not be part. Why? Because the asset was available, was ready. The asset will be acquired. In fact, the interest on the overdue debt is the finance cost. It must be a finance cost instead of the cost of the assets. Yeah. Good. Now the next item is estimated dismantle cost to be incurred after 7 years. Here too, there's no. Let's check if the cost of capital is there. But the one that I probably bring, I'll try and then include the cost of capital. When there's a cost of capital, you have to dismantle it. So you have to discount it. Yes, dismantle. Estimated dismantle cost to be incurred after 7 years, 300,000. So down to the parts. Don't forget that we're supposed to discount the dismantle cost. So estimated dismantle cost 700, right? But if there's a cost of capital, we have to dismantle it. In the initial video, the illustration that I cite, there was cost of capital. So I dismantled the but I discounted it. I discounted it, but not dismantled. Wait. So that is it. Okay, I doing dismantle too. So, but it's 300, not 700. So, take note. Then the last one, operating losses before commercial production, 400. Should be form part. Initial operating loss, so it's not form part. So that's all we are done. That's the total cost. So just take note how you should treat for dismantle cost. So there's a full video. I'll probably link it in the video description section of this video. So you kindly tap on that one. It will link you to how to treat dismantle cost fully. How to treat dismantle cost fully. So 4,300, right? Perfect. That's the cost of what. But I've done two. That means if I've done two, that you also do what? Two. Thank you. So it will be 2 to 2 mapping. I've changed the rule from 1 to 1 to what? 2 to 2. So now let's look at the next question. Okay. Great. Now let's look at this question. It's not you are doing it too. No check. But you are calculating the cost of the asset, the initial cost of the asset. That's all what you're doing now. So the other part of the question should not be part. So I should do it together, right? Okay. So I'll scan through. Question 9. Tutorial question. Yes, question 9. Tutorial question 9. Tutorial question 9. Tutorial question 9. Tutorial question 9. You are just calculating the cost of what? The machine. So Samantha company acquired a machine under the following terms. Manufacturer's base price. Question 9. Tutorial question 9. Page number but no page. Great. Yes. So kindly try. Do as if you are doing anything. So let's come through. Manufactured base price 1,050,000. So that's 1,050,000 as a base price. Trade discount applied to the base price on 20%. Early settlement discount taking 5% on the payable amount of the base cost only. So the payable amount, good. Treat charges, that's 30,000. Electrical installation cost, so the electrical installation cost here. Yes. And then the mechanical installation cost. And then staff training costs in use of the machine is also here, 40,000. Pre-production testing is also here. So currently from this here, just from here up to here, calculate the cost of the assets, the cost of the asset up to here. So up to the estimated residual value. We're just taking those information. So kindly do that for me then. From this question, then look at our last question for the day. And that's all for the initial section. The rest will continue. Great. Now let's try. So I asked for the cost of the machine, but the machine, not the plant. So cost of the machine, right? So cost of machine. So we are looking in thousands. So first, let's see the first item on the list. I have manufacturer's base price 1050. So that will be part, right? So base price, I'll put here base price. 1,050,123. 100 means that 3 zeros, right? Okay, now we've read 3 zeros. So if you've read 3 zeros, it'll be something like this, right? Great. So 1050. And the next item on the list. Oh, it's too small. So let me just make it okay. Too small. It is too small. The figures are not. too big. So let's record it fully. Okay. So avoid trouble. Let's great. Great. That's the solution. Now let's see. Okay. Now let's see. The next item is what? Trade discount applied to the base price only. We said that trade discount less what? Trade discount or similar rebates. You're going to pick what? Trade discount. Good one. So let's calculate the trade discount. It's on the base price. So trade discount must be subtracted. So you get trade discount. Trade discount of what? Open a bracket. Tell the examiner that 10, 50, 1,000 times what? 20%. And that'll give us 200 and what? 10,000 cents. So 210,000. And you put it in bracket. Or you say less trade discount or similar rebate. I like that. Less trade discount or similar rebate. Please, you don't want to touch card discount here. Card discount will not come here. It will not be part. So it's a trade discount that we are talking about. Now let's see. Early settlement discount taken on the payable amount. That means it's on the balance. Yes, after the trade discount is on the balance. Good. So now we are not going to consider that. If you go to the P&L, that's the discount was received. To go to P&L, so not affect what the cost of the PP. That's all. So you do what? Ignore. But you go to where? PP. If we ask you to account for, tell the examiner that it should be accounted for in where? The P&L or the profit and loss. Good, but not the cost of what? The asset. That's all. Freight charges 30,000. Yes, you bad, right? So freight charges. But before that, let's sum it up. We get 840,000. Then you get what we call freight charges. Freight charges is 8,000. Then the next item. The next item will be electrical installation cost 28. So installation cost is 28. So electrical installation cost is 28,000. Great. Now let's move on to the game. Let's move on with the game. Pastor, look after the video on the dismantle cost full. Then staff training cost will be part 40,000. Staff training cost will be part? No, not at all. So staff training cost will not be part. But to be where? Expense in the P&L. So you go to the P&L as what? As an expense. Perfect. So staff training cost will not be part. Then let's go to the next item. Pre-production test will be part. Pre-production, in fact, there's testing, so to be part. Now the issue is that there's a difference between pre-production test and then the initial operating loss and pre-production cost. That's what you call pre-production cost or startup cost. So that one will not be part, but this one is testing. So 22,000 will be part. So I can call it testing or pre-production testing. So 40,000. Now let's move on to the next item. So the next item is what? Oh, it's just 22,000. Sorry, I'll make the price. Purchase of 3-year maintenance contract. Will it be part? 3-year contract maintenance. 3-year maintenance contract. No, not be part. So this 60,000 not be part. It should be in a P&L. Just that you divide it by 3 and share it on the 3-year period. So every year a portion will be expensed in the P&L. It's for 3-year period. Estimated residual value. No, we are not going to use it. So we are done with the cost of the machine. So the maintenance cost will not be parts. The maintenance cost will not be parts. So the pre-production cost is 22, not the 40,000. So let me just do 22,000. So therefore, what will be the total cost of the machine? That will give us 920,000. Great, great. So that is the end of this question. So that's the cost of the machine. I was looking for the cost of the machine. The rest or the remaining part of the question, let's check it against what the subsequent measurements. Then we are done. I hope the total answer is correct. When you sum all this up, you're getting 920. You can confirm for me. You can confirm for me if you're getting the 920. Let me know. If you're not getting the 922. Let me also know. Good. So that is it. That's the end of the game. That's the end of the game. I left one more question for us to solve. I'll just how do you call it? Project the question and then you take it home for me. Good. Now let's try this question. This is one of the I think 2018 May or so. One of the past questions. Now required in accordance of IAS 16, property, plant, and equipment. Calculate the amount that should be capitalized as property in the financial statement for the year ended 31st March 2016. 4 marks. So I'm just calculating the cost 4 marks. So you're going to try this for me. Try. No, I'll read it and tell me. Then that's all. Then we are done. So that when you go home, you what? Yes, the following costs were incurred in 2016 in design and construction of a new office building over 9 months period during 2016. During 2016. Good. That is it. So now it's that feasibility studies 8,000 should be part. I like that. So, so when you go, feasibility studies should not be part. So it must be expense. So feasibility studies should not be part. Architect fee should be part. Architect fee must be part. Site clearance. So site clearance, that's external demolition professionals. What if that one is not there? Exactly. So putting it there to just scare, right? Because it's scary there, so don't need to worry. So 80 will be part. Construction material will be part. Construction material, good. Cost of own inventory used in construction. Maybe you sell iron rods. You just use some of your iron rod to construct your office building. So the question is the cost of the own inventory. But here the cost is 30. Check what is in the brackets. The NRV, if sold outside of the company, will be worth 24 million. So first, will the cost of own inventory be part? Second, if yes, then what value would be 30 or the 24? Why 24? Because here the law of cost and the NRV, how we get it? So you are going to apply IAS 2 here, inventories. Inventories must be measured or valued at what? Law of cost and then the NRV. So here we are not going to use the 30, we have to use what? 24. How we get it? Good. Now, internal construction staff salary during the period of construction will be part internal construction. Our own workers, they devoted their time to go and construct this building for us. But it must be part. Exactly. That's someone's past question. You want to be like that, the same thing. Internal construction stuff like during the period of use should not be part. Sorry, should be part. Yeah. Then external contractors cost, external should be part. So both internal and external construction. That's a construction cost. This is not staff training cost. This one
Start training, like you're training them to use the
machine, good. So that is it. Then income from renting out part of the site as storage depot during the early phase of what the construction. Maybe there was some space somewhere which in initial stage we've not utilized all the buildings. So we just to rent to some people to come and do their distribution center there or their depot there. So and then they give us 12,000. Should we part or we should subtract it? Obviously you can net it, right? No, can't do that. Shouldn't be part, should go to where other income in the profit and loss as well, other income. So on that note, we just add what we said, include what we say exclude, and then you are done. But I need the answer of this. So kindly forward the answer, the final answer of the outcome and let me know. Good. So that is it. Now, thank you very much for coming. The next video will talk about the subsequent measurement of PP. Kindly watch that one before Wednesday, and then you'll be fine. Good. If you do have any question, kindly put it in the comment section or send it to the mail or send it to the WhatsApp. I'll pick it up and respond. Mail or the WhatsApp or Facebook, we'll pick it up and then register it. So okay, great. So that's the end of today's section. Kindly subscribe to the channel if you have not done that and share. If you do have any question, kindly contact the email at the email on the screen and then you'll be fine. So contact it and then if you have any question, you can forward to our WhatsApp platform and then fine. So see you in the next video. Good. Good. Bye.